What's up, everybody? Welcome to the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made my mission to help you guys own it. It has been an interesting day, kind of boring for the most part. Looking at the S&P 500, we're down about 1.25%. The Dow's down another 1%. The Nasdaq is also down 1.5%. Crude oil is also down 5% after a 4.5% day yesterday. Looking at everything across the board, it is red yet again. We've been seeing this since Friday, and it is carrying on over into today. Very interesting to kind of see how this is all playing out. Is this a dip opportunity or is it not? Do you continue to keep yourself on the sideline? We're going to answer that question along with some earnings reactions from the likes of Crowdstrike, Chewy, HP, Chargepoint, and more. And let's not forget about Shit or Legit at the end of the show. So make sure you're putting SOL and your tickers in there for in the chat for our Shit or Legit segment. I certainly would appreciate it. And let's get on to the starting five. So for those of you who came in early, Jeff Punnica, Kevin Hawthorne, Chris Toffer, Bodie Beard, and Prebu, you guys are our starting five. If you missed the starting five, it could be because you're not subscribed or hitting that notification bell to get notified when I go live. Now, I will say this. YouTube did a piss poor job of letting everybody know that I was live yesterday. So I won't hold that against you, but hit that notification bell regardless to get notified when I go live at 3:45 p.m. Eastern time, Monday through Thursday, as we react to earnings when they come in. And I really appreciate the feedback that a lot of you guys gave me yesterday. Some of you gave me some really great stuff that kind of got the creative juices flowing. Some of you were excited about my new venture, my new journey into cryptocurrency, and kind of bringing that to the channel a little bit. And just to let you guys know, if it ain't your flavor, don't worry. We're still covering stocks, okay? I'm not going all the way to one side or the other. It's just another element to this channel. And I'm going to bring Bitcoin mining, or not just Bitcoin mining, but cryptocurrency mining in and of itself to the fold. And I think that a lot of you guys seem to be excited about that. And so I'm going to continue to do that. I'm going to travel down that road and bring you guys along for the ride, and then and go from there. And then also, a lot of you guys expressed interest in just earnings in general. You know, during this kind of slow period after earnings season is over, you know, what do we do in the meantime, right? So I think just kind of dissecting and doing some more due diligence on what to expect for upcoming earnings in the next season ahead is also another road that I would be willing to travel down. So good stuff all the way around. I really appreciate that. And the feedback that you guys gave me. You guys are amazing. I certainly appreciate it. So that being said, let's get on to it. So as I had mentioned, the stock market is been selling off considerably today. It did start off. How do I say this? I said it was boring. It is boring. It sold off within the first 30 minutes, and it's just kind of remained flat for the rest of the day. So rather sideways day after that initial sell-off. Is anybody really surprised by this? I think that it would be surprising for anybody to say that they were surprised by this, right? We're seeing, you know, the continued sell-off because of what the Fed communicated to us, that we could potentially be in for some more pain. And, you know, with Jerome Powell using those strong words, I think that it is certainly, you know, we should take that seriously. We always hear about, you know, don't fight the Fed. That is the cliche of all cliches in investing, right? Don't fight the Fed. Yet a lot of people seem to want to continue to do that. And I'm guilty of this too. I'm not trying to sit here and grandstand anybody. What I will say is to that end is that I think that we should not fight the Fed on this right now, at least in the meantime, until we get some solid data that says, hey, inflation's coming down. I think we either, at least in my opinion, what I'm going to do, sit on the sidelines and wait for my opportunities. That doesn't mean that there are no opportunities out there. And I mentioned this a little bit yesterday, talking about energy in general. Now, as I'd mentioned at the top of the show, energy is down today. Oil in particular is down. And we're seeing a lot of that sell off. But it to me, I think it's more of a reaction to the market in the short term, in the day-to-day, rather than the big picture. So I wanted to kind of show this to you one more time. just kind of give you an opportunity to take a look at something like a PXD, for example. Let's take a look at this chart. PXD, one of the highest yielding dividends in the S&P. I believe it actually is the highest yielding dividend in the S&P 500. And this company is absolutely crushing it. Their break even, I believe, is around $30 a barrel. And so I think that at $30 a barrel, you look at it right now, it's around 90 bucks. This is an incredible move for oil in general. Most of these energy stocks are up 50+% on the year. So you might be asking yourself, is there more room to run? In my opinion, I think, yeah, absolutely. I think absolutely there's a lot of reason to believe that this is going to continue to go up. Now, I started to explain this a little bit yesterday in yesterday's stream, but we talked about a lot of stuff, but I wanted to kind of bring this into focus. There are three reasons why I think energy and oil are going to continue to move up. And one of those reasons is the Strategic Petroleum Reserve at its lowest levels that we have seen in decades. If you guys recall, back in late March, early April, the Biden administration communicated to the world that they were going to be releasing oil from the SPR, and that it was going to be at a relatively decent clip. I believe it was 20 million barrels a day, somewhere around there. Somebody's going to correct me, so please feel free to do so. But anyways, it was a lot, right? And now we're at our lowest levels that we've seen in decades, since the 90s. And so that is one big reason why I think that oil is going to go up. We're still consuming oil at a ridiculous rate, okay? That is going to be something that continues to spin the narrative of bullish oil. The other thing, sanctions. Russia, Ukraine, we're officially in 6 months of war between the two countries, and everybody, not named China and India, have been imposing sanctions on Russian oil. Those sanctions haven't yet fully gone through yet. The execution of those sanctions will be going through in December and beyond. So in a time where we already have a supply crisis, and some of you might be asking, well, this is Europe. This has nothing to do with us. But in fact, it does, because we are a negative export right now. And so that certainly plays a factor. So because of that, to me, I think that is one other issue as far as that's concerned, sanctions. And we're going to consume less oil from Russia, which means the supply is going to continue to be a big problem. And going with that theme of supply, there's no resolution to the supply issue. Nobody's producing more oil, and we're not at a point as far as infrastructure is concerned. And actually, Elon Musk reiterated this just the other day about how we need to continue to rely on fossil fuels until we can actually fully transition into renewables. We're not anywhere near close to that yet, as much as many other politicians and activists want us to be. We're just not there. You can't just force our hands when we're not prepared. We're not ready. And the thing of it is we're not even, it's not that people aren't working towards that. There are even companies that work in non-renewables that wish to actually be in renewable energy. We're just not there. We're not prepared for that. And so that is the third reason. All of those reasons lead to supply. Demand is still very high for renewable energy, and it's only going to get worse as we get into the not renewable energy. Demand is still high for energy consumption. It's only going to get worse as we get into the winter months. Europe is already in a crisis right now when it comes to energy. Russia could choose to shut down natural gas at any time they want to, especially when it comes to the flow into Germany, which they rely almost 100% of their natural gas resource from Russia, which I don't know whose great idea that was. I don't care if it was Canada. You don't rely on one country to supply you with all your energy needs. That is just absolutely mind-blowing to me. So, in my opinion, I think that energy is still going to continue to go up. So anyways, that's why I brought up PXD. I think this is actually a really good opportunity. Yes, it's gone up a bunch from its bottom, but I don't think it's anywhere near being done. So I think that PXD is another good opportunity. What else could we look at? if you're not into, maybe you have your own reservations, or maybe you have your own reasons why you won't invest into something like oil or natural gas. Fine, that's fair. Let's take a look at Enphase real quick. It absolutely went apeshit after their last earnings. And one of the big reasons was because significant growth, 68% quarter over quarter, because Germany is like, oh shit, we need to really start investing into renewable energy, and because we have no other alternative right now. There is no other answer if Russia cuts us off. So we saw Enphase grow significantly last quarter and the quarter before. Enphase, in my opinion, while it's still very hot, it still has the potential to go up much further. And as we get into the winter months, and as Russia continues to be a bunch of dicks, Enphase certainly looks like a promising one. So this is, a renewable energy play. I think if we look at this, and if you're not, for whatever your own personal reasons are for not investing into something like Exxon, Chevron, PXD, or Marathon Oil, I think that Enphase is a great alternative. The only reason I say this, and if you look at some of the other renewable energy stocks, they don't have what Enphase has, and that's profitability. Enphase is making money hand over fist. And in this environment where you're seeing rising rates and the like, I think that, in my opinion, getting into something that actually operates in the black is going to be the best route. So again, these are all my opinions. I'm not telling you what to buy, what to invest in. And I certainly would love to get your thoughts on this, whether you agree or not, because that's the whole purpose of me actually bringing this up. Is this good reason to look at this? Do you think that energy actually is going to be the play in a market where things are going to absolute shit? Or do you think there's somewhere else to park your money? Or you just sit on cash, which you're still losing about 7-8% year over year on? Decision's up to you, but I would love to hear from you guys on that, and let me know what you guys think. As we get into the close, I see Bodie Beard talking about natural gas for sure. Jeff Ponick is excited about Chewy, and let's go ahead and get into that. So we have earnings as the market has officially closed. Let's go ahead and take a look at what's going on with some of these stocks. We have Crowdstrike right now. The stock has started to move up slightly, and let's go ahead and see if I can bring up expected earnings per share for Crowdstrike for you guys. So according to Seeking Alpha, expected earnings per share for this quarter are about 27 cents per share. Estimated revenues around 516.4 million. The big key here is what, right? It is going to be, let me bring up the Crowdstrike chart. It's going to be demand for cybersecurity. And as I just mentioned, Russia-Ukraine situation has certainly impacted this to the upside and created more demand for cybersecurity needs. The other part of this was, hybrid working and cloud space. Crowdstrike, I think, in my opinion, certainly has the opportunity to continue to grow from here because of those reasons. And there hasn't been a stronger need for cybersecurity than now. We saw Palo Alto Networks had significant growth from their earnings just last week. And so I think that Crowdstrike could certainly carry over to this. And this actually presented itself with a good opportunity. You're starting to see the stock move a little bit. I don't think that it's because those earnings are out. This looks like some pretty typical after hours movement pre-earnings. But we take a look at how much this has sold off. When you look at how much Palo Alto Networks has actually grown, this should carry over to Crowdstrike. And we'll see. As I'd mentioned, $544 million in revenue is expected, 27 cents per share. So we'll see what happens here as we carry on into that one. Let's check it into some other ones, see how they're moving. Chewy isn't really moving all that much. This has been really tough for them. Tons of competition has always been a challenge for Chewy. The other part of this has been e-commerce has been a struggle for all of e-commerce companies, and growth has been a real big struggle. Inflation being a problem, people going back to work and actually going physically shopping from actual storefronts. Chewy has just had a really tough go at it. We'll see if they were able to turn this around, but this has been a tough one too. Other stocks to check out, HPQ. This one I'm actually particularly nervous about. The stock right now hasn't moved at all. Let's go ahead and take a look at the 5-minute chart. Stock hasn't moved at all here in after hours, but as soon as we hear from HP, I will let you guys know where we stand with that one. But this is going to be a big struggle. There was so much carried forward from HP and a lot of other tech stocks, right? In the sense of demand. When the pandemic took place, we saw huge demand for computers in general, and it carried a lot of the earnings forward for HP. That's all changed because things have slowed a lot, and so I think that this could be a really tough time for HP. We'll see how the stock moves in after hours, but $90.3 per share according to Seeking Alpha is what's the expected earnings per share, and 15.63 billion. The growth here is going to be a real big struggle here. Next one's going to be Chargepoint, and let's go ahead and take a look at Chargepoint, see where we're at as far as the if there's any kind of initial reactions on earnings. Chargepoint starting to move up a little bit, but not too much. Again, this is your 5-minute chart, and we can zoom in here a little bit, kind of give you guys an idea what's going on. But Chargepoint has also been on the struggle bus here for a little while, and one of the big reasons, again, growth, inflation, supply chain issues. Chargepoint is going to be fine in the long term, in my opinion. I think this is going to be one of the leaders in infrastructure when it comes to charging, especially at-home charging in particular. But it's going to continue to struggle, I think, here in the short term. And maybe they surprise us. I would be happy if they did. A loss of 20 cents per share is what's expected. $103.03 million is the expected revenue there. And we'll see what they do. I see a couple of you guys commenting a little bit. Any news on HPQ? Nothing yet, my man. But as soon as we do, I'll certainly share that with you. Darren says, everyone knows about the energy crunch and demand. Herd mentality says it will not come to fruition. Iran deal is imminent. I wouldn't touch it. Move has been made already. The 80-20 rule. Certainly fair, Darren. I'm not quite sure. We'll see. We'll see if that happens. I don't think anything is a guarantee. Right now, there's nothing that's telling me that energy can't continue to go up. But hey, yeah, I have a little travel light Bodie beard. That's why you see the stars in my eyes. Someone's paying attention. Someone's looking awfully closely at me. I feel like I'm a little uncomfortable right now that you're looking that closely into my eyes, my man. That's not creepy at all or anything. Let's take a look at some other things. Just kind of check back through on some stocks that may or may not be reacting. Let's take a look at HPQ. No reaction there. Chewy is down now 3%. Looks like it spiked down as much as 5% right out of the gate. So those numbers look to be out potentially. Let's go ahead and I'm going to zoom back out here. Yeah. So stock's down around 5% right now. Let me see if I can pull those numbers up and it looks like Crowdstrike may be reacting to. Let's go ahead and pull up Chewy, see if I can get those numbers squared away for you. By the way, I wanted to check in, see who's excited about what. So there's a poll that I put up. 45% of you, no surprise, out of 86 votes are looking forward to Crowdstrike. 12% Chewy, Chargepoint 36%, and then HPQ rounding out at 8%. Let's see here. Looks like those Chewy numbers are out. Let me pull them up for you. So here's some preliminary numbers. As you guys know, it is early, so some of these numbers I may go back on and correct myself. But listen, that's what happens when things are kind of hot off the press, if you will. So, but these are the numbers that I have right now. Chewy rather. Looks like. Come on now, pull it up. Let's hit the refresh button. What I always try to do is cross-reference some stuff here. Looks like, okay, Chewy's net sales, 2.43 billion versus the 2.5 billion that was estimated. Their adjusted EBITDA, 83.1 million versus the 13.8. I'm sorry, estimated was 13.8 for Chewy. Stock's getting crushed right now. As those numbers continue to come in, I will continue to share those with you, but it does look like Crowdstrike's is also out. Let's go ahead and pull up Crowdstrike's chart on the 5-minute so I can let you guys know what's going on there. Let's look at this one here. So stock's down around 1%. Looks like we had a decent spike up to $199 a share. Then it fell down to $187. Starting to claw its way back now. Some pretty typical volatility that we're seeing on reaction to earnings. Looks like there's a lot of digesting going on. with these CrowdStrike earnings. So let's go ahead and pull that up, see if I can find something for you guys in the meantime. Looks like 36 cents per share versus the 27 cents expected. As you guys recall, I mentioned that 27 cents was the expectation. Revenue came in at 535.2 million versus the 516 that was expected. So they beat on earnings per share and beat on revenue. So why could the stock be down? One of the big reasons could be because of guidance. So as I continue to see these numbers come in, guidance numbers are certainly going to play a factor here. They do, looks like they guided higher. They, just looking at preliminary numbers here, looks like they might have guided higher. They did guide higher. Q3 adjusted earnings per share, 30 cents to 32. The estimate was 28. So that's pretty significant. Revenue for the third quarter, they see 569 to 575. The estimate was 569.7. So very much on the high end there as well. Guidance raise and an earnings beat kind of has me struggling as to why the stock's actually red here after hours. But we'll see. I mean, listen, one thing that happens, especially right out of the gate immediately when stocks trade like this, there could be algorithms that read certain headlines, that read certain numbers, that cause the stock to get crazy. It's so early right now that who knows what will happen. We also have, the conference call as well that we'll wait to hear from, see what they have to say that could influence the price action of the stock too. I see Z Writer saying outlook that the guidance to me actually looks good, but we'll see. It looks like it's actually starting to claw its way back and maybe go green. We'll check back in on that one. But Chargepoint right now is actually up 6% and continuing to move up. It is flying right now after being down 3.5% on the day. So that stock is actually moving. Let's go ahead and see if I can find the numbers there for you on Chargepoint. And we'll come back and visit CrowdStrike as well as Chewy, who have already released their earnings. As I mentioned earlier in the show, I was a bit concerned about Chargepoint because of inflation, because of extra higher costs associated with that, supply chain issues still being a problem. But here you go. Revenue grew 93% year over year as the company posted its first $100 million quarter. As I had mentioned, the expectation was $103.03 million. So that's not really all that surprising. That's what people were expecting. Investors were expecting. They came in with revenue of $108 million, though. So they beat on revenue that was expected. So not necessarily the fact that they were over $100 million, but they came in $5 million above expected earnings or revenue for that quarter. GAAP and non-GAAP gross margin improved 2 percentage points quarter over quarter. Not really anything to write home about there. Chargepoint guides to third quarter fiscal 2023 revenue of 125 to 135 million and confirms full year revenue guidance of 450 to 500 million. That is pretty darn good. Gross margin, second quarter GAAP gross margin was at 17%. It was actually down from 19% from the prior year's same quarter, primarily due to supply chain disruptions, which is what I had mentioned. That could be a concern here. Stock's still rolling right now, though. It's up still 6% in after hours trading in reaction to these earnings. I'll give you a couple more tidbits information here. The net income loss, second quarter GAAP net loss was 92.7 million as compared to 84.9 million in the prior year same quarter. Non-GAAP pre-tax net loss in the second quarter, which excludes 26.4 million in stock-based compensation expense, 3 million amortization expense from acquired intangible assets and other items, was 62.3 million. So pretty decent quarter for Chargepoint. Non-GAAP gross margin of 22 to 26%. And I think the big headline here is that they grew 93% year over year as the company posted its first $100 million quarter. As I mentioned, that was expected, but they came in $5 million above the expected revenue, which was around 103. Let me see if I can find any more information on Chargepoint. I see Nick says buy and sell the news. That's always a good rule of thumb for the most part, but they came in at a steeper loss than expected. So they came in at a loss of 28 cents versus 22 was the expectation. As I'd mentioned, 108.29 million versus the 103.97 that was expected. So the growth here must be what the stock is moving on, because it certainly isn't on earnings per share, and it is giving back some of those gains a little bit. But let me know what you guys think so far. covered a couple of earnings already for you. If you haven't hit that like button already, I certainly would appreciate it if you guys wouldn't mind doing that. Do me a solid, people. Do me a solid. Hit that thumbs up if you're enjoying the stream so far. And listen, if you're new, I'll come back to the chart in just a second. But if you're new, I'd encourage you to subscribe and follow me. This channel, in my opinion, and listen, hey, don't take my word for it. There's going to be people in here that probably would vouch for me. I might be biased. They might be biased. We'll see. But I think that you'll be hard pressed to find another channel that covers earnings on stocks quite like I do. Not trying to toot my own horn, maybe a little bit. But if you guys wouldn't mind hitting that subscribe button, if you want to get more up to date and the most up to date earnings information, then I think this is your channel. So do me a solid, hit that thumbs up if nothing else. If you want to see more content like this and you want to get the fastest, most up-to-date earnings info, hit that subscribe button, hit that notification bell. I go live Monday through Thursday at 3:45 p.m. Eastern time every day to cover this shit. So do it. Just do it. You'll do yourself a favor. Bovine says, my first and only options play. I need to learn more how to buy options before and after earnings. Hashtag liked already. Appreciate it, Bovine. I actually have a sister or maybe brother channel, if you want to go that route, over at Don Fran. So the Don Fran Show, go follow him. He's the options king, man. That guy plays both sides of the coin, plays chess while everybody else plays checkers. So go follow him. He's at the Don Fran Show. Anyways, if you want some options info, he's your guy. Trust me, you will not be disappointed. Let's check out Crowdstrike. So as I had mentioned, Crowdstrike came in and had a really great quarter. Guidance was up. They beat on earnings per share. They beat revenue. And the stock initially traded down all the way down to $187 per share after closing the day at $193. Stock's now actually back into the green. Again, it's early, so we can see what happens here, especially after the conference call. We could see a little bit more influence here, but it's at least back in the green. And so far, I'm not really seeing anything in this report that would warrant a sell-off quite like what we're seeing now. Okay. The Data Lord, what's up, Brandon? Chiming in. Appreciate you. Jen says, I always come in here for the earnings. It saves me the annoyance of trying to figure it out what coming out. Hey, listen. Anything I can do to make your life easier, my man. I certainly appreciate it, Jen. Bovine says, I'm rocking with you now and subscribe. And thanks for the Don Fran Show. Yeah, definitely go follow him. That dude's legit. So we also have HP that now is starting to react to those earnings. The stock's down 6% after hours. As I had mentioned, this is one that I was a little bit concerned about. Estimated earnings per share is $1.03. They're expected to come in at $15.63 billion. You know what's crazy to me? And maybe I just don't follow HP close enough. $15.63 billion in revenue for one quarter from a computer company, that's a ton. I mean, maybe I just, like I said, maybe I just don't follow HP closely enough to really to really have too much of an opinion on it. I just look at the industry as a whole and be like, okay, I have concerns about HP. I have concerns about Dell, right? I have concerns about many of the other computer companies. And so it looks as if that was warranted up to this point, but they came in third quarter diluted net earnings per share of $1.08. As I'd mentioned, the expectation was $1.03. So it looks like they beat on earnings per share. Now, as we all know, beating on earnings per share doesn't mean anything. Third quarter non-GAAP diluted earnings per share of $1.04 within the previous provided outlook of $1.03 to $1.08 per share. Third quarter net revenue for $14.7 billion. As I'd mentioned, the expectation was $15.63. So that's probably a big reason why the stock is selling off. Third quarter net cash provided by operating activities of $0.4 billion. Third quarter returned $1.3 billion to shareholders. So they're still implementing their buyback program. That's a lot of shares to buy back. That's a shit ton. But that could be one of the big reasons why we're seeing this sell off. HP came in well below expectations on revenue, even though beating earnings per share. As we all know, and if you don't, listen up. Just because a stock beats expected earnings per share and maybe even revenue doesn't always guarantee the stock's going to go up. There's many reasons why stocks go up or down, and it's not always surrounded around earnings per share. Because remember, these earnings revenue and earnings per share and profitability is a lagging metric. The big key, the big focus is always on guidance. What are we expecting in the future? Stocks, they always move based off of what's going to be happening, not now, not in the past, but in the future. So HP comes in, the guidance wasn't all that great, and the stock is now selling off as a result. Not only that, but they also missed for the quarter that we were actually looking to hear from them on. So revenue's down. Maybe this doesn't come as much of a surprise to too many people, but I saw a lot of people actually chiming in the chat asking about HP. So I want to make sure I gave this a pretty decent coverage, but it doesn't really surprise me to see the stock down as a result. Chargepoint actually did not beat Anthony Walsh. So this is another great example. Chargepoint came in and missed on earnings per share, but they actually beat on revenue, and they announced some pretty decent outlooks as far as growth is concerned. 93% year-over-year growth for Chargepoint. And that's why the stock's actually up. Not because they beat on earnings per share. They actually missed. They came in at 28 cents. They came in at a loss of 28 cents per share. The expectation was a loss of 22. So they came in and actually missed on earnings per share. But the one big reason is the growth. That's why the stock's up. But to be fair, the stock's only just barely given back the losses that it incurred today. So stock was down 3.66%. It's only up 4.5 after hours. So hasn't really given back that much, right? The one stock that is giving me a bit more of a head scratch is Crowdstrike. That quarter, they knocked it out of the park. They beat on earnings per share. They beat revenue. They actually beat guidance and raised guidance, surprisingly enough. And in this environment, that is a big deal. So stock's flat. It was red initially and has started to claw its way back. We'll see what happens after their conference call, but I'm actually a little bit surprised to see the stock where it's at. And maybe there isn't a good reason why it's here, which many cases could provide itself with an opportunity. Maybe it's giving you some time to get in. If CrowdStrike's a stock that you actually are interested in investing in, sometimes that's just how it works. Sometimes there isn't a good explanation. Most of the time there is. But right now, and it's early, maybe we can find something as to why. But right now, we're not seeing hardly any movement out of CrowdStrike at all. And here's the other thing about CrowdStrike, guys. CrowdStrike is super expensive from a fundamental standpoint. Forward PEs at 45 times next year's earnings. That might be a little bit low, actually. 161 times next year's earnings is CrowdStrike's forward PE. So that's pretty crazy. Why is it trading this high? Why are people buying it at this price? Well, one of the big reasons is because of the growth. CrowdStrike's continuing to grow. The demand is not slowing down anytime soon. Cybersecurity is here to stay, and it's going to continue to grow. So CrowdStrike, Palo Alto, Okta, many others are worth looking at in the cybersecurity space, in my opinion. And here's the thing about cybersecurity too. CrowdStrike only covers one part of cybersecurity. There isn't a one-stop shop for all of this shit. Okta covers a specific part. Just to give you an example, CrowdStrike might cover phishing or email stuff, or Okta covers. I can't give you all of the info off the top of my head as far as who covers what. But just to give you an example, and there might be some other people in this space that can give you more, but there isn't a one-size-fits-all as far as cybersecurity companies are concerned. Palo Alto specializes in their own thing. CrowdStrike specializes in their own thing. Okta, same thing, and Zscaler on all the way down. So the industry itself moves almost together, but each company does something a little bit different. So you have to really do some digging on this and figure out what exactly makes sense to you and why you would invest in. And as I always say, make sure you're investing in something that you understand, because if you don't, then you're just asking to lose money. Oliver Thorpe chiming in. What's up? What's up, my man? Feel like we will see a repeat in the June lows, at least before we go up again now. It's possible. I'm not saying that. I'm not ruling that out. Acidine, I couldn't said it better myself. Everything is priced in before earnings. Earnings is just a trigger. I don't know why you have to be so angry about it with all those caps. But listen, man, point taken. HP has a major supply chain issues, says the data lord. Is it data or data? And by the way, I say it both ways. So who knows? The data lord says HP has major supply chain issues. They have 8-month lead times on hardware for their own data centers. That is crazy. And to be honest with you, I don't think. There we go. Data. I got you, bro. That's going to continue to be a problem, not just for HP, right? And we're seeing that from all of the semiconductors, NVIDIA, AMD, Intel, huge problems. And we were forewarned about this about 18 months ago, that this is going to be a potential years-long problem when it comes to supply and demand and the lack thereof. So it's not really a shock to see HP now down another 4%, and it was actually down around 6% at one point here in after hours. This is going to be a continuing theme, unfortunately, until things start to get better. Right now, it doesn't seem to be a real end in sight, in my opinion. Jin says, I say data like how Jean-Luc Picard says it. I'm going to go with data on that one. Did Chewy miss? Chewy did miss. The stock's down 8.9%, and they missed just about everywhere. Let's go ahead and I'll pull up those exact numbers for you on Chewy. Let me chime back in here. On those Chewy numbers. I'll get those pulled up for you. Give me one moment. Let's see here. Looks like they missed. So, I'm sorry. Let me take that back. I read that backwards. So earnings per share is 5 cents versus the loss of 12 cents. I thought they were expected to come in positive. I could be wrong on this. Let me cross-reference. As I mentioned at the top of the show, as earnings come in, sometimes there's mixed numbers and you have to kind of sift through the bullshit. Expected earnings per share was a loss of 11 from what I'm looking at, and they came in at 5. So they actually beat on earnings per share. So I retract that statement. They came in and beat earnings per share. They came in and it looks like they might have missed on revenue. They guided Q3 2022 revenue to 2.44 billion to 2.46. The expectation was 2.6 billion. So the guidance missed. That's a big reason why the stock sold off. Revenue came in at 9.9 billion to fiscal year 2022 revenue came in 9.9 billion to 10 billion. The expected was at 10.4. So pretty sizable misses on guidance, and that's why the stock is missing pretty bad. It is continuing to struggle. And that goes into what we were talking about earlier, right? About just because the stock beats on earnings per share doesn't necessarily mean the stock goes up. Guidance is everything in most cases. And in this case, Chewy actually missed on those guidance numbers, and they missed pretty badly. So that's going to be something that impacts Chewy probably for the next quarter until something changes. But it may be a tough go for Chewy unless they start to show some sort of improvement on their guidance. People, I guess, aren't spending as much on their pets as they used to. Interesting stuff. So appreciate the comment there. No problem, Arson. Absolutely. Carlos, yeah, that's something that we've been talking about. Let's check back in with Crowdstrike. There's no movement here. So that, and this is something that still has been a head scratcher for me, that Crowdstrike actually beat on earnings per share. They beat revenue and actually beat on guidance, and they raised guidance. Everything you would want in an earnings report, in my opinion, and the stock is not really given much. Now it is given back some of those losses they had initially on the initial reaction, but hasn't really moved much. I don't know. It is a bit of a head scratcher as to why this one isn't really moving, and who knows? It could be just the market sentiment, where things are at right now. Stock is expensive. One thing I will point out, though, if we just pull it out to the daily chart, I actually really like this daily chart. It's beautiful. If you guys aren't a part of the Chaos Crew, hit that join button next to subscribe. I actually had Crowdstrike in our watch list for our Chaos Crew. I put out a watch list. It's called Stock Watch Sunday. Every Sunday night, I put out a watch list of stocks that I think are worth taking a look at. Crowdstrike was one of them. And I pointed out this chart here. This ascending channel is a thing of beauty, in my opinion. I think this actually looks beautiful. The fact that the stock's holding up right now also, I think, to me, shows some pretty good signs of strength. This purple line here represents a 200-day moving average, which is holding above very, very nicely as well. Maybe this is just a delayed reaction to earnings, but I really can't figure out why the stock is actually selling off or not really doing anything, because everything you could want from an earnings report, especially in this environment, Crowdstrike delivered on. So who knows? Either way, if you're a holder of Crowdstrike, and in my opinion, I probably wouldn't do much. I probably just continue to hold on to it because demand's not going anywhere anytime soon. So, yeah, big head scratcher. Peter Staddington in the house. What up, my brother? Good to see you in here, my man. Let's see here. Carlos says this is a backwards market. It certainly feels like that at times, but we're not going to shout at the market, right? We're just going to pivot and move like we need to when the market tells us what we need to do. Justin says, what's the consensus? Crowdstrike's good, but back in Chewy guided down. Chargepoint, what's the news? Chargepoint came in and actually missed on earnings per share, but guided up and actually beat on revenue. So that's why the stock's up right now. But as I mentioned earlier, it hasn't really given back much. I mean, it was down 3.5%. It's up 4.69. So yeah, it had a decent reaction. And I guess it's better than going lower, but hasn't really given back all that much as far as movement's concerned. So we'll see. This is good shit. So Peter mentioned that he's going to start starting the DC TV stream right after I'm done here to learn about how the dollar will get stronger and wreck the economy. Interested in this? So read along with me. Yeah, absolutely. So if you guys haven't checked out DC TV, that is decentralized TV, guys, I am burning the candle at both ends here. You have the live stream with me. For those of you guys haven't checked out DC TV, I mentioned this yesterday in yesterday's stream. Each and every morning from 9 to 10 a.m. Eastern time, I go live with some of my very good friends, and we talk about a little bit of everything. Talk about traditional finance, what's going on in the market in the here and now, in the stock market world, but also cover a lot of things in crypto as well. Peter is going to be going live on DC TV in just a moment once I'm done here. And he's going to be giving his thoughts on what's going on with the dollar. That was a really strong conversation that we had this morning on that. I put out a poll on Twitter, asked you guys go follow me on @OwnTheChaos if you're not already. But I thought this was interesting. To me, you look at what's going on in the world. The dollar's getting ridiculously strong. It's getting harder and harder for other countries to kind of keep up. Could we see a shift? Could we see some sort of move in a different direction because of how strong the dollar is becoming? Could there be something that actually replaces the dollar? And of course, the Bitcoin conversation came up, but could there be something else? Who knows? If you guys want to learn more about that, go check out Peter and tune in tomorrow at 9 a.m. to 10 a.m. Eastern time. The link is in the chat, and love to have you guys over there at DC TV. Go ahead and subscribe to those guys as well. So appreciate that you bringing that up to the team. Boston, yeah, Boston's in the DC TV as well. Absolutely. All right, guys. We are actually out of time for Shit or Legit. We'll be back tomorrow, though, because as things slow down a little bit, we'll have a little bit more time for that. So no SOL today because you are SOL, right? Some dad humor. Anyways, guys, thanks so much for tuning in today. I certainly appreciate it. If you enjoyed today's content, if you want to get more content like this, I'm telling you, there is no better channel to go to for earnings information and earnings news other than Own the Chaos. So you might as well just hit that subscribe button, hit that notification bell to get notified when I go live at 3:45 p.m. Eastern time, Monday through Thursday. Thanks for tuning in. Hit that like button on your way out the door, and I'll see you all tomorrow at 9 a.m. Eastern time on DC TV. Click that link in the chat. Thanks so much. I'll see you there.